Greetings on this Sunday, June 30th. I hope this finds you well. We are MAGI, we being me and a mathematician who doesn't really like to be in the front of the camera and has asked me to do all of this for him and us. It is our company. It is our set of proprietary machine learning algorithms. Machine learning is a branch of AI, as I think most of you know. So let's take a look at the data in just a minute, but I want to remind you that this is not financial advice. We're not financial advisors. We're not professional traders. So take the information with a grain of salt and always understand that the data doesn't necessarily equate to success trading with these signals. Although we do put the raw calculation in there, the numbers, we basically look at how many of these we've produced or that MAGI has produced. We then take all of those that were actually reached in terms of the prediction, and we look at all of those that were not reached that are still active, that's what we call them, they haven't reached their targets yet, and those that have expired. And all of that data is on the shared file for you. It's free. We do not charge for it. We do not plan on charging for this file. And even when we get our website together, there will always be a free portion for that. So we really encourage you to stick around and learn about how this works and see if you can make use of the data somehow. What you do with the data is up to you. And with that, let's get into the data. Puts by triggered or the calls by triggered. Run calls by triggered right now. And I'm just going to go ahead and show you what this data looks like and how to read it. So to notice the date here in the upper left-hand corner. So I'm going to highlight the whole row for you. This was generated on the 27th, that's June 27th. That was Thursday. And it was generated after the close of the market using that data. And we ran it also on Friday. And we'll get to this data here because all of this is still active. None of these have reached their targets. But I'm going to go down here to the ones on Thursday for a reason. First, I want to make a point. That point is we could run this data every single day. Sorry about the lights. It looks like the ballasts on my lights in the studio are flickering and going out. I gotta look at that. Hope that does not distract you too much. It is distracting me a little bit, but we'll get through this video. Okay, so what I wanted to bring to your attention is that we could produce the signals every single day. But we are not doing that because we don't have very much time. This particular set of data here on the Thursday, the 27th, what it's showing us is that had we run it on that day, it would have picked up these signals. It picked up this data anyway when we ran it on Friday because we asked it to look back and produce the signals from the day before. And this is what it found. Notice that some of these have already reached their target. So here's one for Adobe. The triggered price was $546.76. And the date it was reached was the very next day. What did it reach? Well, it went up to $552.23 for a 1% move, $554.96 for a 1.5% move, and $557.70 for a 2% move. It also predicts these targets here. Now these targets represent 2.5, 3, 3.5, 4, 4.5, and 5% in terms of the final move here on Adobe. We also have an Autodesk call or a long position. All of these are calls and longs, and you can see that because we're down here at this tab, it says calls by triggered. That's what that means. These are all of the prices that are predicted to go up. So Autodesk with a triggered price of $243.68. What does the triggered price really mean? The triggered price is the date at which there was a price at close of market that indicated to MAGI that the data that preceded it predicts a likely movement of what's to come in the next 20 days. So the data set stretching 5 years plus back is what MAGI has to see, and it's looking at this going, based on this particular price that was reached at the close of that day, I now see a probable set of prices being reached. So that's what that's telling us. And I want to make this point. For those of you who have been tuned in much, much earlier than when my other channel was shut down, you would notice that we had inverse of call and inverse of short. And what those data were telling us is that when it sees a call, it also sees a short action. And that happens X number of times, enough that it triggers the MAGI to see that type of move. We don't set up the data that way anymore. We're trying to keep it very, very simple. Here are the longs, here are the shorts, and you may see the same ticker in the calls and longs as you see in the shorts, because we're not calling it the inverse move anymore, not for this representation of the data. When we get our website up and running, we will have that representation of the data. We'll call it something different, because that way you can see that MAGI is predicting, say, a 5% move in one direction, like it did with Adobe here, and it also sees, say, a 3% move. And then you can infer whether that 3% move means there's going to be a 3% downward move before a 5% upward move, or a 5% upward move and then a 3% upward move. And the way we label that data will make that a little bit more plain to you and a little more obvious to you. Currently, we do not do that. But we do say this is going to be a long, this is going to be a short. And when that happens, we don't really know within that 20-day period. The short could happen first, or it could happen second, or it could happen in the middle of this run to 5%, just using the Adobe example that we've looked at here. So with that idea, let's get back into the data here. So we have AMT that was generated on the 27th. $195.32 is what the close of market was that Thursday. And that has been reached. It reached $197.27 the very next day. And that's what it's showing you. If it says active, like it does here, then there's another move for that same ticker. So AMT also has an active move of up to $198.25. We'll see if that indeed reaches its target. But that's the way to read this data. If it's active, it hasn't reached its target yet. And if it remains active after 20 days, it will be labeled expired. If the predicted move takes longer than 20 days, we will label it expired. It doesn't mean that move can't be reached the very next day, 21 days or 22 or 23 days. In fact, if we were to include those signals that reach their target in 23 days, our reach would be higher. We don't do that because the whole idea is to look at the data within that 20-day period. If we're designing something that says this is going to happen in 20 days, we want to be very truthful about its performance. So let's dive back into the data. We have a number of other stocks here. I'm just going to highlight them so you can see all of them that we haven't talked about yet. If you want to see anything that happened before, like on the 21st, go back and look at the other videos. But let's take a look at all of these. We have a stock here, $61.55 is when it was triggered, and we have a $62.17 price target, and it was met on the 28th. As were CRM. EOG has one that was reached at 1%. We have two of the EOG targets that are still active and they have not yet met their target. HUM, we have two that met their target. Intuit, two that met their target, but we have 1, 2, 3, 4, 5, 6, 7 that are still active and open. So would we take these as a trade? That's another thing I want to address. Let's think about how you would normally trade. If you get a signal from any other service, if you do a analysis using technical analysis, if you're looking at a Fibonacci extension, if you're using Elliott waves, nothing goes up straight and comes down straight within a predicted set of times, whether we're talking about hours or whether we're talking about days. We could be talking about minutes, for goodness sakes. Things go up and they go down. And what we're telling you here is that these in the data that you're looking at here, and what was it? It was Intuit. So if we're looking at that Intuit, you see that 2 of those price targets have been met, and now maybe it's going to settle out, maybe it's going to go down before the rest of that move takes place, and maybe none of that extended move takes place within the 20 days. These are simply the targets that our machine learning algorithms see and predict, and that's why we give you all the performance data in terms of which ones have hit their targets. And you'll notice that we have 17, I think, of these targets from the 27th have met their targets, and that was just one day. And that means that it looks like 15 are left over, because I think there are 32 targets here generated for the 27th. So some of this can happen very quickly, and then some of it can really take a long time. So it's kind of random in terms of what we see, not entirely random because it was predicted, obviously, but random in terms of how it plays out towards that 20-day window. So let's go ahead and jump down here to KMX. We've got one that's still active for KMX. It's a 1% move. MGM has a 2% move that it's already met. All of that had took place the very next day after it was predicted, and that does it for the 27th. So that gives you the reading and how I read this data, and it gives you a sense of how you might approach looking at our data. Let's get into the very new targets, and then I'll wrap up with a quick performance overview. So here we go. I'm going to go up to the 28th, and this is still calls, still long signals. These will go up. These price predictions are the ones going up. Adobe triggered at $555.54 on Friday at the close, and we have a 4.5% predicted set of moves. Each one of these is its own signal. So 1, 2, 3, 4, 5, 7, 8 signals were produced for the one ticker, Adobe. So that will be interesting to see if it reaches its target. And notice that that is 0.5% move less than was predicted the day before. So here we have down here at the 27th that Adobe had 8 different targets that predicted a total of a 5% move potentially, and that was for $574. And this one has a little bit higher prediction in terms of dollars, but fewer on the actual percentage of move. So this was reinforced. Could this be an indication that this Adobe move is more likely to reach its target because other tickers don't necessarily have 2 or 3 days in succession of predicted moves? Well, that is entirely up to the future. Again, we don't know if that will play out. Maybe both of these fail to reach their 4.5 and 5% extended moves, but it is certainly indicative of the possibility that it will reach some of these extended targets. And if I wanted to be conservative, maybe what I would do is say, okay, I feel comfortable going up 3% within 20 days, but there's too much uncertainty for me to take these higher moves, so I'm just not going to do that. Now that would be me deciding to use the data here to trade in that F the charts, like forget the charts type of philosophy. We don't necessarily condone that, but obviously that would be the holy grail of being able to use machine learning on the stock market. Hey, you go out there, all you thousands of math robot agents, and determine what the probabilities are, and I'm just going to play the probabilities without ever having to go to the charts. Woo, what a life that would be, because I'd be able to have, in this case, 37, 38 individual targets here that you're seeing for the 28th or generated on the 28th, and I'd be able to take all of them just by setting my entry and exit prices and forget about it. I would never have to go to the charts. I wouldn't be spending hours doing it. I'd let all the math robot agents do it, and that's kind of what we would hope happens eventually for us. In fact, we're hoping that we can codify this so that MAGI generates the signals, places the trades, monitors the probabilities of the trades, runs every single day, and says, you know what, I don't see that trade on Adobe any longer, day 3, day 4, and we're out of there. We mitigate our risk that way, all automatically. What a utopia that would be. That is our vision for the future. That's what we would like to work on. That's what we're going to be using our capital to complete. But until we're there, we don't have much to show you for it, except for what the brains of MAGI produces, and that's what you're seeing here. So let's go into the rest of this. We're going to look at ADP. It's got a 3% predicted move. We have 1% predicted move here on C, and then CRM is 1%, and EMR is 1%. EOG, we've got a 2% predicted move. When I say 2% predictive move, really what I mean is there's 1, 2, 3 separately predicted moves, meaning that if we hit 1%, that is a success unto itself. If we hit 1.5%, that is a success unto itself. And if 2% fails, that's a failure, right? That's a hypothetical. Hasn't happened yet. We'll see what happens there on EOG. EXPE, I think that's, is that Expedia? 1% move. HD, Home Depot, looks like a 3% move, a 3% move up. HUM looks like a 1.5% move up, potentially. Definitely looking at this one. This was kind of looking at it the other day. IBM, 1%. Intuit, 2%. MGM looks like a 3.5 potential. I like this one too. I'm thinking this one is in advance of this idea that it's summertime and people are going to go on vacation, all that stuff. So I'm going for the 2%, 2.5% move. I'll probably not take this extended move over here. I'm just letting you know what I'm doing. This is not financial advice. You do whatever you want to do. But this was something I was going to set a target for and experiment in my trading platform with. PNC, 1% move. Okay, so that does it for the calls. Let's go into the puts or the shorts. You can look at that data just by selecting this tab here. And we're going to go into those generated on the 28th and briefly on the 27th, and we'll wrap the new data up in just a second. ADP, looking for a 1% move. CI, looking for that 1.5% move. ENPH, Enphase, lots of activity here potentially. And this is what I was talking about earlier, is that, you know, to have the statistics that the raw numbers show here, you would have to enter your trade at or below the entry price if it's going, you know, if it's a call, or at or above the entry price if it's a put, to make sure that you're getting that full range of predicted moves. And if it goes against you too much, well, you're stuck. And you would need to be able to have some way to know as we go through time whether or not those trades are still valid. And currently we only run this once a week, so we're only looking really at Friday data. We add that Thursday or Wednesday data sometimes just so you can see what it would have predicted and how the data is indicative of what's going on in the market, or what's predictive of the market. So again, you know, we can't do that right away. We will hopefully be able to run this every day at some point in the future, but we're not doing it now. Take a look at some of the remaining predictions here. We'll go with Nike at the bottom of the 28th triggered set of data. That's a 1% move, going down to $74.62. That one was amazing because it did predict a move that was pretty severe in Nike. It lost a lot. I think it lost like $20 from the mid 90s to the mid 70s, and that was a pretty big move. But didn't predict the whole move. It just predicted that it would go down, and it did meet that target from the 27th and earlier. But it's just showing 1%. So it's now showing, okay, well, it's had a big move, and maybe it's only going down a little bit. And then LEN looks like it's going down 1%. HES is a 2% move down, and GIS, which I think I mentioned earlier, 1% down. Performance overall appears to be roughly 84%, with roughly 81% being on the call long side and the short side 91%. That gives you a good sense of what we're producing here, and you can see total we've got 5,000 plus were generated, 5,000 individual signals. So that gives you a sense of what we produce here every week and its performance, its relative performance. When I say relative, I really mean relative just to the last few weeks or the last 20 days, because of course we're not telling you anything here on the performance tab how it does if we extended that 20 days to 23 or 25 days, for example. It would increase, but that's really not the point. The point is that we're giving you the data for a specific time frame, and can the machine learning actively predict this accurately, and can you use that data to your advantage? That's really a question you are going to answer for yourself. We don't want to steer you any particular way. That's not our goal here. Our goal is to produce engaging data for you to review, consider, leave comments, and to generally build awareness of our project in advance of commercializing it. We're not asking anything of you other than your attention, and we're going to always provide some level of data free for the public. Thank you very much for attending today's review of the data. Hopefully I didn't go on too much and drone on too much, but I wanted to give you some detail because we're getting a lot of new viewers, and I want them to be able to understand how that data works without having to go back in time and waste their time on old data, unless of course you want to for some reason. That's up to you. But thank you again, and we will see you next week.